China is in trouble. I'm going to show you exactly why that is the case and why that will actually be a problem for the rest of the world. What does it signal? What does it mean? I'm going to tell you that here today. My name is David Quintieri, and what I do at this channel is bring you the truth. I have been doing this for well over a decade, digging into all the different layers all around the world, looking into the information that's most important, and then bringing it to you. In today's video, I want to highlight specifically what's going on with China and why that's key for everybody else. It's going to make a lot of sense in a minute. Let me get into that right here. China holds urgent meetings on the economy with business leaders, economists. Foreign executives asked for ways to grow the economy. Tone of the meetings described as pressing amid waning confidence. You see what's going on here? Right now with China, they are worried, they are concerned because no matter what they're doing, they can't get the economy to grow, at least at the pace that they want it at. Let's be clear, they've been doing public works projects for many years. They've been building empty cities for many years. They've been doing everything they can, including the Belt Road Initiative that is essentially trying to build infrastructure all around the world. Now think about this. What China has done is unlike any other country. You see, they want, let's say, a resource from some country, we'll make it up, let's say Brazil. And in Brazil, they want to be doing business there. They want that resource and they want to bring it back to their home country. Okay, maybe it's, let's just make up something where they want iron ore. Okay, so they want that iron ore. What do? Do they buy iron ore from them? No, they set up a company, they set up the establishments, they get the trains going, they have the ports on their own, the companies that are all there working, employees aren't Chinese. Like each step of the way, they want to own and or control it so that it comes all the way back. It's as if it's an extension of their own country. It's just like what they're doing in the United States. Do you see this? If they own all of the elements within that to bring it back to them, they have full control. They might be able to fully own it, or maybe it's like a lease, or maybe they have some stake in the business. Some way, somehow, they want to control the resources in other countries so that they can bring it in. The other country can't say anything, and then that, of course, that gives them more leverage. That's what China has done. However, doing so is a huge undertaking, and they are in a massive amount of debt. They are in so much debt, and yet a lot of countries owe them. So it is when you look at the financial system, the way that is built, unusual, but I think it's important that you should be focusing on this today, and I want to cover more of it, okay? Because you're going to realize how these dots all connect. Senior Chinese officials are soliciting advice from business leaders and economists on how to revitalize the economy in a flurry of meetings. Attendees have been characterized as unusually urgent in their tone. So when I say this emergency, this is their words. This is what they're saying. Top officials had held at least 6 consultations in recent weeks with the executives, according to people that were present. Leaders pressed those assembled for ideas on ways to stimulate the economy, restore confidence in the private sector, and revive real estate industry. That's the big one. Why? Because it is a multi-trillion-dollar industry. How big is the real estate industry in China? Do you remember? I'm going to quiz you right now. Pop quiz. How big is the real estate industry in China? Let me give you a hint. It's the biggest in the world. Put it in the comments below. Let's see if you remember that number. It's in the trillions. I'll give you that. And we'll put it down there and we can see who is right. Okay, I'm going to talk about that later on. How big is the Chinese real estate industry? Okay, that's important, of course, because you can see what's been going on over the last while. They have this huge asset and that it's crumbling. And one of those indicators was Evergrande. Oh yeah, as long as everybody keeps buying at an impossible rate, okay, then you're going to be fine. Look, they were building empty cities. You can't, that cannot be sustained. They tried it. They certainly did. And now you've got one company after another. And now the government has kind of come in and tried to do, they haven't really bailed it out, but they've really backstopped all the bleeding publicly. There's still a lot going on behind the scenes. There was a consensus among the high-level government officials and some 10 people present at one meeting about 2 weeks ago that more and better coordinated monetary and fiscal stimulus is needed. So what can you expect right here? I think it is very clear that they want money printing and they want interest rates to be brought down. And guess what? They're doing that. I'll show you this today, okay? If you're interested in what's happening within China and why this affects you, listen on, I've got more. China's recovery weakens as industrial retail activity slow. You can see the numbers there. Retail sales did climb, okay? We're talking about what? Year over year, lockdowns, all these things. So of course, that looks good against lockdowns. China's restocking amid post-2020 recovery. So you can see the inventory is at the near highest in 2 years. And I wouldn't actually consider this a good thing, okay? They have way too much inventory at this moment. It's almost where it was at this point of the peak in 2020, 2021. You want to be able to push that stuff out. You want to be able to actually have companies buy it from you, don't you? If you're an exporter, well then you don't just want to sit on inventory, you need to sell that. And they're not be able to do that. China's weakening economy puts, and by the way, entrepreneurs out there, knowing this information, when you go to speak to a supplier, you got to use that as leverage. You got to deal with that. Use this information as leverage. Maybe it's an investment or maybe it's a business. Remember that. They're sitting on a lot of inventory, depending on the industry and depending on what it is. During 2020 timeframe, who really won was the travel. People are doing a lot of travel stuff because all travel was shut down. So if you were willing to buy that inventory and sit on it, these companies were giving it away practically. Little tip, okay? China's weakening economy puts focus on stimulus after rate cut. PBOC cuts one-year policy rate after lowering short-term rates. So they're doing this on multiple levels. You hear about the Fed funds rate. That's just one aspect of the Federal Reserve, right? It's like one thing that they can do. There's a lot others, and the same is in China and everywhere else. China needs more tax revenue, risking backlash from the middle class. The wealthy would also object. Under the current system, only 10% of the population pays income tax. So you can see there's obviously a lot of people in rural areas, in places where they're just making so little. And what are you going to do? You're going to tax them? That's not a way to bring in that money, okay? Certainly, you could see compared to other countries, Germany, Japan, and the US, the total revenue brought in by China is less, all right? Tax revenue less. Total spending is less too, all right? And so you can take, from that what you want, but I'm just trying to suggest to you that if you want to slow down economic activity, you just, increase taxes. They know that that's not going to work, but anyway. May data adds to the evidence of an economic slowdown. Industrial output, retail sales miss expectations. Youth jobless rate hits a record high, by the way. Property investment decline deepens. So you're not able to fool people. China cuts medium-term loan rates as economy sputters. More easing is expected. And that's part of it, right? Because they really need to know this. The markets need to know it. China cuts a key policy rate for the first time in 10 months as economic rebound cools. Okay, all part of that same information. And I think it is just clear to understand what's going on here. Economy slowing down, not enough exports. What does that signal? If they're not exporting, if they're sitting on higher and higher inventory, if they've got to stimulate, what does that signal? You got to understand, China, although there's a lot more domestic consumption happening today than there has been in years prior, what do you think that means about Europe, about the United States, about other countries where they are not basically able to do what they did before? They're not importing from China. The retail establishments inside of these countries, they're not selling as much. So that's a slowdown going on everywhere else. People say, China's slowing down. Yeah, China. They're exporting to your country. You might say, oh, good, we don't need it. We got to realize what just the signal, it's an economic indicator, okay? So if you're not willing to pick up on that, you're going to miss out on it. It is a global slowdown that's taking place today. Stock market, not going to feel it, let's be honest, okay? And if these companies that are losing business, if all they have to do is just fire a bunch of people and the stock will go up. That's the way this works. The stock market has no relevance to Main Street. It's literally, there's nothing. You know, the AI, all you got to know is AI. Any company, if Microsoft changed its name to Microsoft AI, it would get a boost tomorrow. Even though like nothing changes fundamentally in the company, what about Caterpillar? Okay, Caterpillar, oh, Cat AI, instant boost. It's just the new SPAC. It's the new, you know, all this nonsense, every other boom and bust we've seen before in terms of the stock prices. AI is important. It's popular. It's becoming more prevalent. But you know, just having that with like as a component of the company is not. I'm ranting. Here we go. By January this year, 150. This is the Belt Road Initiative. 151 nations had already signed up to the BRI, Belt Road Initiative. No less than 75% of the world's population that represents more than half of the global GDP. Look at it. You're talking about the BRI potentially increasing global GDP by $7 trillion a year by 2040. We don't know what's going to happen, but these different areas where they've been building up into, we potentially could see so much more development, so much happening, and that means more resources that are needed, that means more jobs potentially, and that means basically more economic growth. That's a good thing. However, who's taking part in that growth? China is not, you know, doing that at all with the United States. And so China has a long way to go. They are saddled with so much debt. They clearly have a problem with economic growth, but we have to understand the long term, and that's really what this is about. They have to watch out with their debt, get it under control, make sure that they're having enough income, enough revenue, enough resources also entirely to be able to sustain all this, because nothing like this has ever been done before. So we'll see what happens here, but it's certainly something that you got to pay attention to. I know a lot of people say, China, look at it. I'm telling you, I'm seeing both sides of the equation. They have empty cities. They've got the ghost cities. They've, you know, done a lot. I'm not suggesting otherwise, but know the truth, okay? And then, you know, just very, very quickly, I want to touch on New Zealand dips into a recession. One of my subscribers asked, what's going on with New Zealand? You could see technically it was only a 0.1 into the negative, not much, but rate hikes in doubt. We'll see what happens. Australia, look at what happened with Australia and Canada. They both increased after they were suggesting, no, it would never happen. Japan's exports grow at the weakest pace since 2021, demand slowing down. You see what I'm saying here? This is going on everywhere, and China is kind of like the bellwether of all of that. Thai central bank to hike more as rate not neutral enough, says core inflation's high. So they got to get that inflation down. That is going to slow the economy down everywhere you go. What can you do? What do you got to do? Right here, and that is increasing your income. Having a side hustle is where it all begins. So you got to click on this video right here, and I'll see you there.